Imagine this. You buy a rental property in Ontario. You've been doing everything right. Good neighbors, solid tenants, long term plan. You expect the rent to cover your mortgage and maybe even build some equity along the way. But suddenly, you're stuck. Your tenants are leaving. You can't find new ones. Selling would mean taking a loss, and buying something else, just forget it. Welcome to Ontario's rental crisis, where landlords can't rent, can't sell, and can't buy. For years, being a landlord here has felt like a sure thing. Rents were rising, property values were exploding, and everyone said real estate only goes up. But 2025 looks very different. Across much of Ontario, the rental market is softening. Vacancy rates are rising, incentives like first month's free are popping up again, and the average rent for a one-bedroom in Toronto, according to Treb, has dropped more than 5% compared to last year. That's the first real decline that we've seen in several years. So what's going on? If housing supply is tight, if people are still struggling to buy, then how are landlords suddenly struggling to rent? The truth is, it's the perfect storm. Interest rates went up fast, and even though they've started to come down, financing costs are still way higher than most investors had planned for. At the same time, new supply has finally started to hit the market. Thousands of condos units finishing construction and more purpose-built rentals coming online. Add in slower immigration and tenants moving back home or consolidating, and the once booming rental demand is softening. But here's the kicker. Landlords can't just raise rents to offset the pain. Ontario's rent increase guidelines for 2025 is capped at 2.5%. Meanwhile, insurance, property taxes, and maintenance costs keep climbing. So for a lot of small landlords, the math just doesn't make sense anymore. And it's not just landlords feeling the pain. When rents fall, property values fall too, because investors and appraisers look at income potential. When values drop, sellers pull listings. And when there's no movement, even renters who want to buy are trapped. That's why this isn't just a rental issue, it's an ownership issue. It's a financing issue and a confidence issue. So I want to break this all down step by step. The three nightmare loops of Ontario's housing market. Number one, landlords who can't rent. Number two, owners who can't sell. And number three, buyers who can't buy. Because once you understand how these three forces feed each other, you'll see why Ontario's housing market isn't just cooling, it's changing completely. So let's dive in. All right, let's unpack this, because when we say rental crisis, we're not just talking about tenants. We're talking about landlords caught in a system that no longer makes sense. And once you connect the dots, it's hard to ignore this is a full-blown reset. So let's start with people who can't rent. For years, Ontario's rental housing market was red hot. You could post a listing and get 20 applications in a day. Not anymore. According to Treb, the average one-bedroom rent in Toronto has fallen about 5% year over year. It's the first real decline that we've seen in years. And for landlords relying on rent growth to offset rising costs, that 5% hurts. Why? First, thousands of condo completions are flooding the market. Second, more purpose-built rentals are opening. Third, tenants are downsizing, getting roommates, or leaving expensive cities altogether. I talked to a client in Mississauga, 3 showings in 3 weeks, 0 applications. A year ago, that unit would have been gone in 24 hours. And remember, landlords can't just raise rents. The 2025 cap is at 2.5%, while expenses like insurance and taxes are up 10 to 25%. That's a negative cash flow situation. So can't rent doesn't just mean no tenants. It means that you can't find tenants at the price that covers your costs. And when the numbers stop working, the next logical thought is I'll just sell. But here's the kicker. You can't sell. And that's where nightmare number 2 hits. If you've listed a rental, likely you already know buyers have pulled back. Those still in the market aren't paying peak prices anymore. They're doing the same math you are. Rents are down, rates are up, cash flow is tight. CMHC data shows advertised rents in major Ontario markets have dropped 2 to 8% in early 2025. Lower rents equals less income, which also equals lower valuations. So imagine holding a bucket that's leaking water. The less income it holds, the less it's worth to the next investor. That's why we're seeing longer days on market, price cuts, and landlords deciding to hold even if they're bleeding every single month, because locking in those losses feels worse than waiting. Now, I spoke with an investor in Hamilton who listed their duplex at $899,000. No bites for 6 weeks. Dropped to $849,000, still nothing. Their tenants moved out, and now they're covering the entire mortgage themselves. When I asked why not just sell lower, they said because then I'm admitting it was a bad investment. That's the psychology right now. People are stuck between bad options. Sell and lose money, or hold and hope it turns around. And remember, the GTA is flooded with listings. Buyers have choices. If your property doesn't cash flow, then move on. So you can't rent, you can't sell. Maybe you think, fine, I'll buy something else that works. Well, that's where nightmare number 3 kicks in. You can't buy. The can't buy problem hits both investors and regular home buyers. For investors, qualifying for a new mortgage has never been tougher. Lenders are stress testing debt service ratios more strictly, and with lower rental income projections, many deals just don't qualify. And it's about to get even tougher. OSFI, the federal bank regulator, has introduced stricter capital and underwriting rules. Banks now have to hold more capital against investments and higher risk mortgages. In plain English, that means investors qualify for less. Higher debt service requirements, smaller loan amounts, and more scrutiny on how rental income is used. Even experienced investors are finding it harder to expand their portfolio. If your existing property is barely breaking even, your bank will likely won't finance another. Even if you want to pivot to a triplex or move to a smaller city, financing is the new gatekeeper. For renters, it's not much better. Even with the 2 Bank of Canada rate cuts, a typical buyer is still qualifying at 6 to 6.5%. That is because of the stress test, and that's hundreds more a month than 2 years ago. So people wait, they rent longer. They say, let's see what happens. And that hesitation feeds back into the rental loop. Fewer buyers equals more renters equals more negotiating power for tenants, but less profit for landlords. We're seeing regional splits. Niagara, Guelph, and smaller markets still seeing 5 to 7% rent growth. Toronto and Mississauga flat or falling. Investors who bought in the wrong region at the wrong time are feeling squeezed. Landlords can't rent profitably. Property values fall. They can't sell without losses. They hold on. Buyers can't buy because of the rates and OSFI tightenings. Demand stays weak. It's a closed loop. Everyone's waiting for something else to blink first. And that's the real crisis. Not just numbers, but sentiment. Landlords don't trust recovery. Buyers don't trust rates. Renters don't trust that ownership is possible. And it's like a traffic jam on the 401. Everyone's foot's on the brake, so the market's not crashing, it's frozen. You can't rent, you can't sell, you can't buy. But here's the thing, every cycle creates winners and losers. The people who adapt early are the ones who come out ahead. So let's talk about exactly how to do that. All right, so now that we've talked about the pain, let's talk about the opportunity. Every correction resets the playing field. And right now, the people who plan, prepare, and pivot will come out stronger. If you're a landlord, stop thinking like it's 2021. This is a new market, one that rewards professionalism, not speculation. Review your numbers. If you're negative cash flow, explore options, refinance, extend amortization, consolidate high interest debt, or reposition the property. Focus on retention. Keeping a great tenant is worth more than chasing a higher rent. Offer small upgrades, communicate, create a win-win agreement. And if you're tired, don't panic sell into weakness. Stabilize, hire a property manager, ride the market reset instead of running from it. Number 2, if you're a renter or future buyer, if you are renting, you finally have leverage. Compare listings, negotiate, ask for incentives because vacancies are up and landlords are listening. Use this breathing room to prepare. Save aggressively, pay down debt, and monitor your credit. Because when the market turns, readiness is your competitive edge. Remember, buying a home isn't about timing the market, it's about timing your life. If you're not ready, that's okay, but make the waiting productive. Now, if you're a first-time home buyer, here's the silver lining that no one talks about. A lot of the rental units sitting vacant right now, condos, townhouses, small semis, are perfect starter homes. Prices are soft, sellers are negotiable, and you actually have time to breathe during the purchase. Instead of competing with 20 other offers, you might see one or even three. Some landlords are ready to offload properties that no longer cash flow, which means that you could get in for less than you could 2 years ago. Combine that with lower rates and flexible lending options, and first-time home buyers window is quietly reopening. If you've been on the sidelines waiting for a sign, this might be it. Now, if you're an investor, easy money is gone, but smart money is back. Markets like Niagara, Guelph, and parts of southern Ontario still show solid foundations. Don't chase appreciation. Chase cash flow, population growth, and job stability. Run your numbers assuming flat rents and higher expenses. The big picture and closing thoughts, this crisis isn't just the end, it's a reset. From speculation to sustainability, Ontario's housing market is maturing. And whether you're a landlord, renter, first-time homebuyer, or investor, this is your time to get strategic and not scared. If you want to run your numbers, explore refinancing, or figure out your buying power, that's exactly what I do. You can just book a 15-minute call with me with the link in the description or visit meetjustin.ca. And we can build a plan that fits your life. Because the market is challenging, but challenges is where smart decisions are made. And if you approach this with clarity and confidence, you will come out ahead. The rental crisis might be real, but so is the opportunity hiding inside it. I'm Justin Chaussee, and if you like this video, please like and subscribe so that we can continue to make more videos like this for people like you. Thanks for watching, and I'll see you in the next video.